Involving blood plasma will be made more widely available. EU Trade Chief Phil Hogan says he is profoundly sorry for attending a golf dinner in the midst of the pandemic. Stocks push higher on hopes of a thaw in US-China trade relations. Markets turn attention to this week's virtual Jackson Hole and the Fed's crisis-fighting measures. And more than 100,000 people protest against the Belarusian president in rainy Minsk. The rally demanding the resignation of Alexander Lukashenko ended peacefully. Matt.
All right, let's take a look at futures here as we get closer to the open right now. We're looking at green arrows across the board. 1% gain in Eurostoxx 50, the widely traded Eurostoxx 50 futures contract. The live equity indexes are opening up now, and we can see those as they pop up on the global macro movers screen. So let's go ahead and pull that up. The left-hand column will populate with indexes as they open up. The FTSE usually the first out of the gate. Today is no different. It's up right now about 0.3%. Sweden's OMX gaining about 0.8% after the Prime Minister there gave a speech saying they need to take advantage of this crisis and move forward. You can see the Netherlands opening up, as well as the CAC 40 in France, more than 1%. Now the FTSE is up more than 1% as well. So as these equity indexes, European markets open up, they are all gaining and showing basically 1% or more gain. So European markets opening higher on this Monday morning. That's after a bump in Chinese and Hong Kong listed shares on signs of a thaw in the U.S.-China relationship, or a report at least on that. Managers starting to become wary of stocks exposed to geopolitical tensions, especially ahead of the U.S. election. Europe may provide the antidote here. Fund managers are now the most overweight European stocks since 2018. U.S. stocks have hit fresh records, but Europe is still 15% off.
Morning, everybody. Welcome to SG Trader on the live day trading channel. Follow us for free, live, copy our trades, and make some profit. We trade our own funds in front of you and our clients so they can see how profit been made. I want to remind that we're not an academy, a trading college, and we do not teach you to trade. If you would like to learn and make day trading as your second job, you need to start following our trades, get the strategy we use, and practice it through our live trading sessions. What we're going to show you this week, we'll show you trades of 5 pairs. We'll show you trades on Japanese yen, British pound, Canadian dollar, euro, and Bitcoin. Like I mentioned, all our trades live. 1 pip equals 100 pounds, except Bitcoin, where 1 pip equals 10 pounds. Just watch, enjoy. If you want, you can follow our trades. use your own broker. We do not ask you to sign up or anything. If you like our live stream, you can subscribe. It will help us to the channel grow. Okay, welcome again.
Clearly, companies exposed to online sales, retail, payment, digital payments, companies that deal with the enterprise in terms of outsourcing, or actually also in terms of how to get to the customer, so the digital customer experience. Now, if we do get cyclical recovery, and I said if, actually it is when, post-COVID, then that shift, the focus will move away from those clear beneficiaries of what we are seeing in COVID world, if you like, to companies that are naturally exposed to cyclical recovery. And this is when we're talking about industrials or even banks, which is banks and some traditional cyclical exposure. The problem that everybody has is figuring out when. We are, as you know, bottom-up investors. We look at companies over 5-year horizon. So for us, it's trying to find those companies that have got the ability to take advantage of that growth going forward.
What kind of recovery do you expect, Gadir?
The path to recovery, a lot of people have been talking about V-shape, U-shape, tub, L. Really, the recovery has to be predicated on two things.
Hello, Gassim. No, we do not hold right now at this moment positions in Bitcoin. We sold it a few weeks ago. Okay?
What we are looking for is companies that are exposed to how the consumer and the enterprise and therefore the economy will work post-COVID. What does the new normal look like? Because quite a lot of the changes that we have seen right now in consumer behavior, in enterprise behavior, in retail spending, in entertainment is likely to stay even post-COVID. We are going to go into a new world. Secondly, a lot of the focus that we are seeing at the moment is from regulators.
I was just going to ask you about ESG stocks. Yeah, apologies. I think we were going on to talk about the same thing. I want to ask you about ESG stocks because, yeah, you're bottom-up investors and you put stocks through an ESG sort of filter. A lot of people asking questions about whether active management is the thing to be in right now. I'm sure you believe it is, but where are you seeing opportunities in that space?
Thank you for that. Actually, active management implies also active ownership of stocks. When you look at ESG, it actually means looking at companies with the lens of whether the companies are good in terms of people, in terms of the planet, in terms of equal opportunities, socially enabled, etc. So for us, looking at ESG is looking at companies that fulfill certain values of certain criteria that we believe will mean that the return for our investors is higher than expected, or the risk-adjusted return is good. So we've been looking at ESG or integrating ESG in our ideas, in the way that we look at companies and pick companies for over 5 years now. So therefore, when we are looking at where the opportunities lie, you hear all the headlines from the regulators about green recovery or change, etc. For us, what we do is we look at the companies that can take advantage of that or that are enablers of that, whether it is in terms of how you do business, or whether it is in terms of opening up to diversity, whether it is companies that are basically looking to improve their environmental management of their actual supply chains, etc. These are the companies that we are focused on, and they don't sit in any particular sector. It's all companies that are going to be taking advantage of that.
Gadir, thanks very much. Stay with us. Gadir Cooper, Global Head of Equities at Barings. Still with us on the programme. 7 minutes past 8 here in London. European equity markets up by more than 1% so far this session. Coming up, tech has driven gains in the US, as we've been hearing from Gadir, since the coronavirus sell-off in March. But our valuation's starting to look seriously stretched. We'll hear from our interview with the CalSTRA's CIO next. This is Bloomberg.
I'm placing an order to buy Japanese yen at 105.850. Order placed to buy Japanese yen at 105.850.
Welcome back to Bloomberg Markets. This is the European Open. We are 10 minutes into the trading session this morning, and we're looking at 1.5% gains to 2/3% gains across the continent right now. Let's get the Bloomberg Business Flash for you. These are today's top corporate stories from the Bloomberg terminal. Goldman Sachs expects almost a quarter of temporary layoffs in the U.S. to become permanent. The bank says some 2 million people could remain unemployed well into 2021, while the transition rate from temporary to permanent layoffs remains historically low. The figure nearly doubled from June to July. These are, of course, U.S. figures. Saudi Aramco has reshuffled its senior management. It's putting a top executive in charge of portfolio optimization. That's as the world's biggest oil producer adjusts to lower crude prices. Aramco says the new department will assess existing assets and boost access to growth markets. And TikTok plans to file a lawsuit against the Trump administration. That's to challenge its executive order banning transactions with the video app in the U.S. The firm says it strongly disagrees with the concerns raised by the president. Donald Trump has given owner ByteDance an ultimatum: either leave the U.S. or sell its operations in the country. And that is your Bloomberg Business Flash.
Now, Matt, the record-breaking rally in US stocks has been largely driven by tech, with the sector now making up more than a quarter of the weighting of the S&P 500. Even more outlandish is the lack of breadth in the rally. Just 5 stocks accounted for 22% of the index. But the CIO of Calstras told Bloomberg that the current market is not sustainable and encourages diversification.
The FANG stocks, or now we got to add a T in there for Tesla, those are all doing well because of COVID-19. And eventually we're going to solve this health crisis. And then there's a question of what happens on the other side. You look at those measures, the US and the whole world, technology is at the 99th percentile of valuations. At some point, you're going to have a huge reversion to the mean. Probably not. It can stay and persist for a while. But at some point when the health crisis is solved, we are going to go back and shop in other places in Amazon. We're continuing to use Microsoft just like we always did, but you're going to have a reversion of the mean, and that's going to be painful.
Let's get to Gadir Cooper, Global Head of Equities at Barings. Gadir, we were just hearing there about how there will be some swing back to quote-unquote normal or life before COVID when we do get a handle on this virus. What kind of risk is there that we tip back away from some of these big tech names, away from the working from home phenomenon, away from the online retail phenomenon into other spaces, and how vulnerable does that make tech look?
It is actually easy to imagine that you would go back to a world which is completely different to the world that we've gone to. We've seen the evidence of that post-COVID, in the fact that, for example, even when retail was opened, a lot of the sales were still online. You will have that change that we were talking about a minute ago in consumer preferences. There will be obviously some change back to, if you like, physical economy. We believe that is the case, but we have seen company after company talking about working from home, working flexibly, etc. So the new normal will not be the same as pre-COVID. Earnings, therefore, that we have seen from those very highly valued companies have been delivered, i.e. what we are seeing is that an acceleration in the trend that we have seen before COVID in the change to online away from high street, in the change to digital payment away from cash, in outsourcing data centers, in digital customer experience. So we believe those trends that were in train pre-COVID will continue. The question is different.
I'm just wondering, Gadir, is the new normal, you know, a while, I guess maybe almost 10 years ago now, I read a book called Rage Against the Machine by a couple of professors at the Sloan School at MIT. And they said, you know, with increased automation in an increasingly digital society, there're just going to be a lot more people without jobs. We just did the Goldman Sachs story. They think 2 million of the temporary job losses in the US are going to become permanent. Is the new normal one in which society has to figure out a way to pay people that don't work?
I think the new normal requires a society that educates and trains people for the new jobs. So actually moving to digital doesn't necessarily mean that you are going to end up not being able to find a job. It just be in the new economy. For example, if you're doing a sale online, you will be purchasing something that will have to be that will have to be delivered for the last mile. And you'll need engineers, you'll need software developers, you need all of those to be your backup story. So the important thing for us is the ability to be able to move to the new digital economy in a way that with enough training and enough people able to do that. That doesn't mean that the physical economy disappear.
Yeah. So Gadir, do you see the rally that we've seen in stocks, do you see it as out of step with the underlying economy? Or is it just that our assessments of the underlying economy don't really reflect the new reality that we're in?
No, I actually think that you have to always beat that in reality. And that's why for us, we look at 5-year earnings, and we believe a lot of those companies have priced in quite a lot of that growth. So we don't actually own them for now, despite the fact that we are absolute believer in the secular story. What matters is bottom up, finding those companies going forward that you are able to be able to deliver returns to your clients by owning those companies, because I think that's the important thing. We're not thematic investors, we're bottom-up investors. But to answer your question about why we think there might be some vulnerability there, it's because what happened at the start of this pandemic are investors worrying about cash flows, about companies with cash flow, and where earnings delivery is. We believe going forward, the earnings delivery will come from broader sectors as economies open post-COVID, and therefore there are opportunities now that are very attractively priced in other parts of the economy, not just that very, very narrow way of looking at the world.
Can I just ask, you're not a macro economist, you're, as you just said, a bottoms-up equity investor, although you do hold a PhD in theoretical physics, which I think is fascinating. What's your view on inflation, Gadir? Because we do see areas, you know, for smaller priced goods like foodstuffs, where clearly prices are rising, and some commodities as well. On the other hand, we're in a situation where car makers or appliance manufacturers have very little pricing power. And it's obviously a question that the market is really concerned with. So what do you expect in terms of inflation?
The inflation monster, we call it. Actually, it's very easy to see why the market is worried about inflation but not pricing it in the way that you would have originally have done that with yields, etc. We did have the Federal Reserve Chairman talk about made-up inflation. We've had unprecedented money being put into economies in order to help with the COVID slowdown, or actually stoppage. And yet we are not seeing inflation in the way that you would have thought about inflation coming back. That is really a reflection on the fact that quite a lot of that money actually ended up in savings rates as opposed to being spent. And also because of the changes in manufacturing, in just in time, in all of those things through the last few years, and also because interest rates are very, very low, that allowed a lot of companies to carry on working, and therefore there was a lot of capacity to produce those white goods that you were talking about. However, going forward, sorry, let me just tackle food inflation. I think that is just a dislocation because of COVID and because of weather, but that is transient.
All right, Gadir, thanks very much for your time today. Gadir Cooper is the global head of equities at Barings. Really appreciate you joining us. Coming up, tens of thousands of protesters have gathered in Minsk in Belarus to protest against the disputed presidential elections there. This is Bloomberg.
We open position on Japanese yen at 105.850.
Welcome back to Bloomberg Markets. This is the European Open right now, 23 minutes into the session, and we're looking at 1.5 to 1 3/4% gains across the continent to kick off this week. Now, massive protests flood the streets of Belarus once again. Tens of thousands of protesters have gathered in Minsk to protest against the disputed presidential elections and possibly the president himself. Alexander Lukashenko continues to defy calls to resign. He's been seen arriving at his residence carrying an automatic rifle as well. That's quite a statement. With us to discuss more is Bloomberg's Russia economy and government editor, Greg White. Greg, thanks so much for your time. Is President Lukashenko showing any signs at all of backing down? Really a hard question to pose when looking at these images.
Yeah, so far the TV pictures, as you mentioned, are pretty compelling on that front. He confronted the demonstrators yesterday afternoon with phalanxes of riot police and barbed wire around his residence, and then he flew in on a helicopter in a flak jacket carrying an automatic rifle with his 15-year-old son, who also had an automatic rifle, and Lukashenko went out and greeted the riot police guarding the residence and to thank them for his support. So he clearly is trying to show a tough line, at least publicly, and he's threatened to take more measures to crack down on the protests starting this week, closing factories where workers have gone on strike and going after more protest organizers, though it's unclear whether he can marshal the kind of crackdown that it would take to suppress such an enormous movement. The protests yesterday were sort of more than 100,000 people at least in the capital, and in tens of thousands in other cities as well. Certainly the biggest that have been seen there since the collapse of the Soviet Union.
Greg, just briefly, I heard the foreign minister of Russia calling for dialogue over the weekend. What is it broadly that Russia thinks at the moment of all this?
Russia's trying to play a bit of a balancing game here. They've publicly supported Lukashenko, criticized the opposition, but they'd like to see some sort of dialogue. And we're hearing some signs that they're worried that the political damage he's sustained in this crisis will make it hard for him to continue to rule as he has for the last 26 years. So that they'd like to see some kind of they wouldn't be allergic to some sort of compromise as long as Belarus stayed relatively firmly in Russia's orbit.
All right. Greg, thanks very much for joining us. Gregory White there is Bloomberg's Russia economy and government editor talking to us about President Lukashenko. Those pictures we just saw, I think, were very interesting. Coming up, we're going to talk about Britain going back to school. Boris Johnson said the risk to children's health is small. This is Bloomberg.
Welcome back to the European market open. 30 minutes into Monday's trading session, and it looks fairly positive actually at this stage of the trading day, up by 1.3% on European stocks broadly. US futures also gaining, up by between 0.5% and 6 or so tenths of a percent. So some strength coming through there. Interesting to look at some of the movers. We have, if I'm looking at a sector breakdown, all sectors apart from one in positive territory. So bear that in mind. But travel and leisure is the only sector that is in the red, that is negative today. Looking at some of these movers then, we have BT said to be on alert for takeover approaches. A bit of talk in the media here in the UK about whether there could be a takeover approach for BT. Bank of America saying that BT's pension could represent a challenge to any takeover, as you might assume with the size of it. Prosus also in focus, listing of Naspers 30% stake in Tencent rallies. So this is of course a read across from what we're seeing in the Asian session with the Tencent listing rallying on Hong Kong, and then that feeds through into Naspers and Prosus. Let's have a look at AstraZeneca. Trump may fast-track the vaccine before the US election was one of the headlines running over the weekend, and that's clearly getting some attention, and we see the AstraZeneca share price is on the rise by 2.3% this morning. Matt?
All right, let's get the Bloomberg First Word News. Today's top stories from the terminal. One of President Trump's longest-serving aides is leaving the White House at the end of the month. Kellyanne Conway, the first woman to manage a winning presidential campaign, says she's quitting to focus on family. Her husband is also leaving a campaign group committed to defeating President Trump. Conway says the two may disagree, but they're united on what matters most, and that is their kids. On Capitol Hill, the House has passed a bill to roll back service cuts at the U.S. Postal Service. That's after concerns the changes could hit mail-in voting at the November election. Lawmakers allocated an additional $25 billion to the USPS. But the post office is concerned by some of the requirements. It says they constrain its ability to improve efficiency and reduced costs. Tropical storm Laura is making its way across the Caribbean. It's hit Haiti and is heading closer to Cuba. It'll then make its way to the U.S. Gulf Coast, which faces a double whammy from tropical storms. Hurricane Marco is also rushing to make landfall in Louisiana today. In preparation, over half of all output in the Gulf of Mexico has been shut down. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Anna?
Matt, let's talk about the latest on the virus. The British Prime Minister has made a direct plea to parents, asking them to send their children back to their respective schools when they reopen next week. That's as some teachers and union officials voice their growing concern that it's not safe to do so, or at least in some cases asking for more guidance on what to do in an outbreak. In a statement, Boris Johnson said the risk of contracting COVID-19 is very small, and it is far more damaging for a child's development and their health and well-being to be away from school any longer. We're joined now by Professor Jimmy Whitworth from the London School of Hygiene and Tropical Medicine. Professor Whitworth, very good to speak to you. So as we brace for the Northern Hemisphere winter, how concerned should we be in Western countries, and you can talk about Europe as a whole or the UK specifically, whichever you feel is more appropriate, how big an outbreak should we brace for compared to what we've already seen from this virus?
A good question, and I think it's hard to be certain about the way this is going to go, and I think it depends partly on the measures that we put in place to try to stop this and how well the general population actually abides by those rules. I would go along with what Chris Whitty and Prime Minister Boris Johnson are saying about it's important to get children back to school. I think this really is important. It seems pretty clear that for primary school children, at least, the risks of them getting the virus or passing it on to others is very low indeed. Where the worries are, I would say, are the adults associated with schools. So whether that's the teachers or the administrative staff or indeed parents coming, this congregation of people there from different households poses a risk to the adults. So we do need to have very good measures in place, social distancing, cough etiquette, and so on, to make sure that adults associated with schools don't get infected.
And Professor, the risks are clear. I don't think a lot of people are worried about the health effects on, 5 to 14-year-olds, but if they bring it home to grandma and grandpa, that's a big problem. On the other hand, and I know that you specialize in infectious diseases and epidemiology, but what are the public health and especially mental health effects of long-term lockdown? I mean, don't kids need to be in school and socialize with people their own age? And don't parents need them out?
Well, you would think so, wouldn't you? That seems the logical thing. But there's a study that has just come out from the University of Bristol that suggests that anxiety levels have been lower in children during lockdown than they were before. I haven't studied this paper in great detail, but if this is true, then I think this says something about the stresses of going to school. So maybe it's not as obvious as it might seem.
Professor Whitworth, you've talked about backward contact tracing as needing to be part of the mix. Tell us, how does that differ from regular standard contact tracing, and how much backward contact tracing is being done in the UK to get us ready for the winter?
When we talk about backward contact tracing, what that means is that the people who we identify as being cases, we're then looking backwards to see how they might have become infected themselves. So, for example, if they had been to a pub a few days previously, that might mean that you want to investigate other people from that pub to see if that was a source of where infection may have come from, and then to notify other people who'd been to that pub as well. So it's looking backwards as well as looking forwards at the people that the cases might have contributed to.
That sounds...
This is being done.
Clearly, I'm no expert in epidemiology, Professor Whitworth, but that just sounds like contact tracing. Isn't that what contact tracing should be doing? If it's not doing that, it's not tracing potential contacts.
It is what you should do if you've got the resources and you're able to actually apply them and identify the people who are in the pubs and so on. So, for example, having systems where pubs, restaurants do take the names and contact details of people who are going there is vitally important, because if you didn't do that, you simply wouldn't know who the people were who had been at that pub. So sometimes it's just impossible to do that backward contact tracing, because all you could say is, oh, I was at this event, but I don't know any of the other people who were there.
Well, I mean, it seems to me it would be a pretty easy thing for the government to do. The interesting problem is the privacy concerns. I mean, it has to, I guess it has to be done by Big Brother, because people don't want some people don't want other people to know that they had the coronavirus. I don't know personally why there's that issue, since it's just kind of like having, any other virus that isn't embarrassing or anything to contract. But it doesn't really work, especially here in Germany. People are very concerned about privacy. I know in the UK also, companies that find out an employee had it won't tell other employees, so they never know if they went to the pub with her or him after. The privacy issues just don't allow it to really happen well, do they?
No, I think it is surprising. And this business where if you are contacted and you then give the names and addresses of people who you have been in contact with, then when those contacts are traced, they're not told who gave any information. Now, it seems to me there's a sort of etiquette involved in this, that if you were naming contacts, then it might be good manners to actually tell those people that you had named them. rather than them finding out that some mystery person did this. I mean, it seems to me that that would just be good manners.
Professor Whitworth, thank you very much. Professor Jimmy Whitworth from the London School of Hygiene and Tropical Medicine. Apologies for the delay there. Thank you very much for joining us. Really good to get your insights. Up next, questions continue over an oil spill off Mauritius as an investigation looks at how and why the vessel which hit the reef was in the area at all. We will get further details. This is Bloomberg. Welcome back to the European market open. 43 minutes into Monday's trading session, and European equity markets making gains. US futures point to the upside as well. Let's get a Bloomberg Business Flash. Some of the top corporate stories that we're covering this morning at Bloomberg. Goldman Sachs expects almost a quarter of temporary layoffs in the US to become permanent. It says some 2 million could remain unemployed well into 2021. While the transition rate from temporary to permanent layoffs remains historically low, the figure nearly doubled from June to July. Saudi Aramco has reshuffled its senior management. It's putting a top executive in charge of, quote, portfolio optimization. That's as the world's biggest oil producer adjusts to lower crude prices. Aramco says the new department will assess existing assets and boost access to growth markets. China's banking regulator has pledged its backing for Hong Kong as a finance hub. It's reiterating its commitment to opening up the Chinese financial sector. The comments come during a deepening standoff with the United States. It's forcing global banks to walk a tightrope between the two world powers and competing rules. That is your Bloomberg Business Flash. Matt?
All right, now an investigation into the devastating oil spill in Mauritius is still trying to establish why the vessel was there in the first place. The MV Wakashio was 11 days into a month-long voyage to Brazil when it hit a reef and leaked at least 100 tons of black sludge into the clear turquoise waters off of the island's southeastern coast. Joining us now is Amina Gharib Fakim, former president of Mauritius and also a scientist. Thank you so much for joining us. Really an honor to speak with you. I think a lot of people were outraged when reading about this and following this over the past weeks. Ms. President, why are these kind of industrial ships, very large ships, driving over one of the most important coral reefs in the oceans? Why wouldn't they be, banned from these important areas?
Thank you very much. Thank you for having me. And in fact, tomorrow marks 1 month since we experienced the crash of the Wakashio on our reef. Now, you have raised a very important question. I think we're also grappling with to getting some answers. Because while this ship was bound for Brazil through the Indian Ocean, it was not destined to be anywhere near Mauritius. And this ship is among the 1% biggest ship that has been built. And it's the same size as an aircraft carrier, just to give an idea of the size. And as we speak, we still don't know the exact amount of fuel that has been leaked into our waters. But one thing we know is that our beaches are now very, very badly impacted. And what is interesting is that for a whole month, we have seen a deafening silence from the shipping industry. There has not been major communiques from them. We are waiting for answers. We are waiting to hear from the regulators because as we're increasingly being made aware that the fuel which that ship was carrying was not crude oil, but low fuel grade oil which was being carried on a vessel which is a single hull, not even a double hull. So these are issues that we would like to hear from the regulators, why such fuel is, which is of course very new, coming to our waters, and we have no idea, but now we are the victim of this incident. Now, for information, because here I speak as a scientist.
Former president.
Yes. Yes.
Yes, so I wanted to, further to that, I wanted to ask about what case for compensation you think Mauritius has. Do you think the owner of the ship should be paying damages that perhaps might be difficult to get from the insurance company, but do you think that the owner of the ship has a liability here?
Well, we know, there are so many issues which are linked to the compensation issue. First of all, it depends also on how many conventions the government here has signed up and ratified. The other thing, what we're seeing now backward and forward, is that the Japanese, the owner of the ship, they have made the appropriate noises vis-a-vis, paying the insurance, of course, compensating for the damage done. But beyond the compensation, because there are one more thing that we have to add here before looking at the compensation issue, is that this ship was not an oil tanker. And we know that the compensation for an oil tanker and just a cargo ship, the compensation levels are different. But beyond the compensation, we are looking at the damage which is being done to our wildlife, which is being done to the livelihoods of so many people. And now the information coming out is showing that this fuel, it's very new fuel, and the work has not been done in the tropical environment where this fuel has been leaked. And this fuel, when leaked to the warmer waters of the Indian Ocean, for example, we can see the polycyclic aromatic hydrocarbons which will be leaked in the ocean. And we know how dangerous that is for wildlife. And we all know also, even if you clean up the ocean, remove most of the oil, it's never 100%. So this will linger on for so many years, and this is happened precisely near a whale sanctuary. And we have so many of the whale passages in our ocean, so God knows what's going to happen to the livelihoods of these animals beyond those of the fishermen and all the industry that this oil slick has impacted for us, because tourism brings about 24% of our GDP.
Well, and I mean, more than most people what kind of damage this could do, as you have a PhD in organic chemistry, and of course we're the president of a country that relies on this kind of marine life for its livelihood. I tell you, I do some diving in a spot in Indonesia called Mazul, and they have a 300,000 acre no-kill zone. No fishing is allowed there. None of these tanker-sized ships are allowed to drive through there. Why not make a huge no-kill zone around someplace like Mauritius? Wouldn't it be better for the ocean, for the earth, and even more profitable for the people that live on that island?
Oh, definitely, because we have a huge exclusive economic zone, almost 2.2 million square kilometers. But all depends on the reactivity of the government in terms of course adhering to the international convention, how this can be done. But beyond this ship has hit the reef very close to our marine park. It's one of the most biodiverse regions of the world, and also next to an islet, which to us has become the symbolism of conservation. Unfortunately, Mauritius is well known internationally for the extinct bird called the dodo. But we have been very good at rehabilitating our fauna, especially the bird fauna, and the islet, which is now surrounded by an oil slick, is precisely that islet where 20 plus years of conservation may be reversed. And how can we make an assessment of this in monetary terms alone? I mean, these are questions that beg answers, and we're waiting to hear from them.
Thank you so much, former president, for joining us. Amina Gurib Fakim, the former president of Mauritius. Thanks for joining us to talk about these events off the coast of Mauritius. Up next on the programme, we'll get back to the markets. What would no-deal Brexit mean for assets? We will put that question to Christine Aquino, who leads our Markets Live team here in Europe. This is Bloomberg.
Welcome back to the European Open. We are 54 minutes into the session right now, looking at some strong gains on this Monday morning for European equity indexes, as well as the FTSE 100 in London, gaining right now almost 100 points. to 6,099. The DAX is up 222 points and the CAC adding 90. Joining us now to talk about what's behind these gains is Christine Aquino. She leads our MLive team in Europe. And, you know, I think it's interesting, Christine, a lot of people are talking about optimism that the U.S.-China relationship maybe hasn't degraded as much as we thought because of reports from unidentified sources in the Trump administration that some tech companies are going to be still allowed to work with the WeChat app. Is the WeChat app so important that it could drive, you know, like the U.S. economy and the U.S. stock market to gains?
Well, no, I think that speaks to just the nature of this rally right now, where every little bit that markets can get as a reason for optimism, they're going to take it and power stocks higher. And that really is kind of the story in these markets that we've seen throughout the year, really. I mean, every time that we get a little bit of nuggets to stay optimistic, investors are very, very willing to take it. And perhaps that's a reflection of, you know, the broader environment that we're in, of course, which is still very much mired in the coronavirus crisis, and looking to the longer-term economic impact of that, which, of course, is not expected to be good. But in the meantime, investors are happy to take every little bit of good news that they can get. The question is how long this is going to last, and at what point will they say, well, actually, you know, we're going to need more, either in the form of more fiscal stimulus from governments around the world or more monetary stimulus from central banks.
Yeah, Christine, thanks very much. Yeah, monetary stimulus, that'll be a feature of the conversation later on this week. Christine Aquino leads our Markets Live team in Europe. And Matt, we are going to turn our attention to Jackson Hole. Even if it's not happening in person, a virtual version will be taking place later this week. And we'll hear from Jay Powell. So a lot of focus on monetary policy, or maybe even fiscal, if they talk about that too.
All right, that's it for the European Open. Stay with Bloomberg Television, because up next, you'll see surveillance. Although you may want to switch over to Bloomberg Radio. If you're in the London area, tune in on DAB. This is Bloomberg.
Risk rally on global stocks push higher on signs of thawing trade tensions and fresh hopes on the coronavirus front. President Trump says a coronavirus treatment involving blood plasma will expand. Markets turn attention to this week's virtual Jackson Hole. And then you've got the Fed's crisis-fighting measures to consider as well. And the Republican National Convention begins in North Carolina today. This as the presidential rival Joe Biden says he would be open to a second term despite questions over his age. Welcome to Surveillance. I'm Yusuf Gamenedine in Dubai. We've got quite the risk-on session and across quite a few asset classes. Let's get you the state of play. Again, the signals we're getting between the U.S. and China are encouraging if you're looking to go long on this trade. S&P 500 mini futures are called higher. We're seeing quite a few gains in the European stock story as well. Tech and cyclical sectors, including autos, are leading those gains. Fund managers are most overweight on Europe since 2018, according to the latest Bank of America survey as well. The fixed income space, we have Italian bonds standing out, pairing a little bit of the gains. Still outperforming, though. You got Italy's health minister ruling out a new lockdown. Treasury steady in the United States. Euro dollar, we're at 118.16. A little bit of upside here. That's a weaker dollar story that's weighing on your broader G10 space. And the Brent crude getting a clear lift here, 0.7% higher, even though the net long positions are at the moment the least bullish in 3 weeks, according to the latest CFTC data. Let's check in on the Bloomberg First Word News for you, get you some of the other stories we're watching. Starting off with President Donald Trump. He says a coronavirus treatment that involves blood plasma from recovered patients will be expanded to more sick Americans. It widens access to the promising therapy even before researchers fully understand how it works. The Financial Times is also reporting the White House is considering fast-tracking the Oxford AstraZeneca vaccine. One of President Donald Trump's longest-serving aides is leaving the White House at the end of the month. Kellyanne Conway, the first woman to manage a winning presidential campaign, says she's quitting to focus on her family. Her husband is also leaving a campaign group committed to defeating President Trump. Conway says the two may disagree, but they're united on what matters the most, and that's their kids. In the UK, Prime Minister Boris Johnson is urging parents to send their children back to school next week. That's as concerns grow among teachers and union officials that it isn't safe to do so. The government is arguing the risk to a child's development is greater than the risk of the coronavirus. And that is your First Word update. Well, let's get to that U.S. stocks futures story because they are at records as we begin the week. And investors are waiting for the Fed Chairman Jerome Powell to deliver his Jackson Hole speech. And the Republican National Convention is, of course, going to get underway as well. And all of that, despite a fresh warning from the Goldman Sachs folks. They're saying that almost a quarter of all temporary worker layoffs in the United States will become permanent. We're now joined, of course, by Valentin Marinov. He is the head of G10 FX Research and Strategy at Credit Suisse, Credit Agricole. Thank you very much for coming on the program. So what do you expect to materialize out of these Jackson Hole deliberations? Are we going to get the kind of inflation targeting signals that many in the market are penciling in?
Well, as you're saying, actually, we in the markets are already expecting some clearer indications by the Fed chair on Thursday that the Fed will be indeed pivoting towards average inflation targeting. And with that, really, the Fed will be committing to tolerating inflation overshoots in coming months and quarters as it tries to bring inflation back on the target, which is now average, will be average inflation. And I have to say that you mentioned the quite a buoyant sense of the stocks, global stocks here, that at least part of that is already baked in the cake. I think investors are already looking for indications that the Fed will be shifting to an inherently more dovish policy stance from here.
We're just getting out a chart for our clients, GTV Go, for the additional perspective on what the Fed is grappling with in terms of inflation and the kind of targets that it's working with or might have to work with, rather. So if you're saying the expectation from the market is for some kind of signaling in this Jackson Hole discussion, then if we don't get that, is that going to translate into a bit of a repricing in the dollar on that change of outlook?
Oh, okay. So in terms of impact, clearly, I think some negatives in the price in terms of expectations. I do think that there will be something, there are some headlines to point in that direction. Fed speakers, not necessarily Jerome Powell, but other FOMC members have been discussing really tolerating overshoots towards 2.5%, not necessarily higher, which would point at a softer version of average inflation targeting really likely to be adopted as a result of the Fed's strategy review process. But as you said, in terms of really market expectations, there is still some uncertainty regarding the details. And as you also said, really some negatives are already in the price of the dollar. We did see really U.S. yield and rates really treading water, but generally remaining rather low historically. My point also being that if indeed the Fed's chair fails to surprise the already existing market expectation of average inflation targeting really by signaling more aggressive overshoot or indeed intentional overshoot for a longer period of time, you could actually argue that the dollar may recoup some lost ground. In a way, you would think that the price action surrounding the speech by Fed Chair Powell on Thursday could be seen as a buy the rumor, sell the fact, where the dollar could consolidate across the board.
I mean, you're saying that's going to be the shorter term driver. I'm looking a little bit out, and arguably that's not that much further out, but to the U.S. election, we've got two candidates here, at least at the moment, that is Mr. Trump and Mr. Biden. Which scenario would result in what kind of price movement in the greenback would you, at this point, believe?
Well, at this stage, it seems like discussions with clients are pointing at the clear split in the sense that a Democratic Congress and presidency are seen as really potentially likely to adopt a less business-friendly policies, meaning that could be less positive for the markets, by implication less positive for the dollar. Equally, a re-election of President Trump, a second term for President Trump, could be the tantamount of more aggressive protectionism, plus some fiscal expansion, not necessarily as aggressive as we've seen really previously up to 2018, but nevertheless more aggressive compared to what the Democrats could offer. By implication, all of that package could be seen as more positive for the dollar. Given the current polls, obviously, you could certainly make a direct connection between the current dollar underperformance and the polls that are suggesting that the Democrats could well be in control of the Congress and indeed the presidency come November or rather January next year. So that could be one of the explanations. And maybe just to come back to the inflation targeting, looking beyond the actual event this week, I mean, the longer-term implications of the inflation targeting likely to remain quite negative for the dollar. The fact being that depending on how aggressive the Fed's approach.
If I could just interject here, Valentin, just to flesh your point out on the greenback, because as much as that might have an impact, the reality is that the road to the White House from this point onwards is fraught with all kinds of tensions and heated rhetoric. That means that you've got quite a bit of a risk that some investors are going to seek haven plays. Does the dollar get back into this picture again? Does it get supported by potential haven flows again, even though at the moment it looks far from it?
Well, it very much depends really on the outcome and the uncertainty. You could argue that a fairly contested vote with the outcome still uncertain well past the election date with recounts looming could indeed weigh on risk sentiment. And given that the dollar is the ultimate safe haven, that could play in the hands of the dollar. Equally, if indeed, as I was saying, Trump is re-elected and that leads to a new bout of really uncertainty, especially with respect by the trading partners of the U.S., that could again translate into more dollar strength. A Democratic Congress and president could, at the margin, be negative for sentiment to the point that investors worry about the future policy mix and how this is going to impact the economy. That said, I do think that under the latter outcome, the dollar negatives will continue to outweigh the dollar positives coming from the market uncertainty. Where we are at the moment, actually, our conclusion is that FX volatility, or indeed bets on heightened uncertainty surrounding the election, are actually interesting. We think that vols for the likes of Australian dollar, Canadian dollar, New Zealand dollar look like an interesting really investment opportunity, just because we expect a very contested vote that could also be a drawn-out one that's going to weigh on risk sentiment.
Valentin, we're going to get into some of your other calls shortly. Valentin Marinov stays with us. He's, of course, from Credit Agricole. Let's get you a bit of a snapshot of what is coming up this week. Make sure you put this firmly on your agenda. So as the Jackson Hole goes virtual, investors are going to be bracing for signals from Jerome Powell's speech on the Fed's next crucial policy move. So we're going to bring you the latest throughout this week and a lineup of very special voices. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. Let's get you the Bloomberg Business Flash stories. Starting off with Goldman Sachs, they expect almost a quarter of temporary layoffs in the U.S. to become permanent. It says some 2 million could remain unemployed well into 2021. While the transition rate from the temporary to the permanent layoffs remain historically low, the figure nearly doubled from June to July. Saudi Aramco has reshuffled its senior management. It's putting a top executive in charge of portfolio optimization. That comes as the world's biggest oil producer adjusts to lower crude prices. Aramco says the new department will assess existing assets and then boost access to growth markets. TikTok plans to file a lawsuit against the Trump administration. That's to challenge its executive order banning transactions with the video app in the United States. The firm says it strongly disagrees with the concerns raised by the U.S. President, Donald Trump. He's given owner ByteDance an ultimatum: either leave the U.S. or sell its operations in the country. That's the Bloomberg Business Flash. Let's talk about Beijing, because China is pledging its support to strengthen Hong Kong's role as an international financial center amid the standoff with the United States. China's banking regulator said it will provide support for financial institutions who are doing business in Hong Kong while complying with regulations. Let's get more with Valentin Marinov from Credit Agricole. Valentin, What is your latest read then on these U.S.-China tensions? Because if I look at the last 48 hours, signals again have been very mixed and very conflicting.
Well, indeed. So the tensions between the U.S. and China are likely to be with us for a foreseeable future. As a matter of fact, we expect those tensions to feature quite prominently during the U.S. presidential campaign. And from that point of view, I guess both candidates, really, both Joe Biden and Donald Trump, President Trump, will try to portray themselves as the tough guy, really the person who is likely to defend the U.S. interests against China. And equally, on the Chinese side, we think that they are certainly trying to protect their own interests with respect to trade, with respect to geopolitical influence. So no real indication that those tensions will be abating anytime soon. What is important for the markets, and why at the moment at least the markets are seemingly ignoring all of that, is the fact that those tensions have not escalated to a point that they are jeopardizing, again, the trade relationship between the U.S. and China. So long as this is the case, those tensions may continue to simmer, but I guess the markets will continue to be blissfully ignorant about what's happening there, and instead preferring to focus on other drivers.
The Chinese yuan is broken out of the Bermuda Triangle. That's how the Markets Live team is describing it. GTV Go for our clients, and it's setting sail towards the 685 level. They're also making the point here that the fact that it keeps appreciating in the face of geopolitical headwinds just highlights the stronger fundamentals that are supporting the yuan. Can you subscribe to that kind of view?
Well, in a way, certainly the fundamentals, the Chinese fundamentals overall are among the more resilient, really, set of fundamentals we've had at the moment anywhere in the world, really. It is the case that the Chinese authorities were quite successful in dealing with the COVID-19 pandemic, opening up their economy, and now certainly they're reaping the fruits of that particular strategy. And equally, I mean, in the U.S., the pandemic still rages on, and that makes a lot of people quite concerned about the U.S. economic outlook. So in terms of a really policy outlook, you can't get clearer than that. The rate advantage of the Chinese yuan vis-a-vis the dollar is growing, seems to be continuing to grow, and that ultimately is reflected in the currency appreciation we've had in recent weeks and months. What is also quite interesting there is that the Chinese officials have guided really some of that appreciation by fixing the yuan really stronger and stronger against the dollar. And to us, that's another indication the Chinese officials are trying to be seen as very constructive throughout that whole trade debate with the U.S. They don't want to engage in competitive devaluation and so on and so forth. So long as really the trade conflict doesn't escalate from here, you think that you should be subscribing to a view of a potentially more resilient yuan against the dollar. Clearly, the risk is that if indeed those risks were to escalate anew,
of course,
the process could go into a reverse.
Valentin, it's been great catching up. Appreciate your views. That's Valentin Marinov. He's, of course, the head of G10 FX Research and Strategy. He's from Credit Agricole. Coming up, well, it's the biggest challenge to President Lukashenko's 26-year rule. And after more than 100,000 people that came together in the Independence Square in Minsk, we'll get the latest on Belarus's disputed presidential election. This is Bloomberg. watching Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. Well, more than 100,000 protesters gathered in Minsk yesterday to protest against the disputed presidential election. Alexander Lukashenko, president of Belarus for 26 years, is facing pressure from opposition leaders to resign. In a show of defiance after their rally ended, local media published a video showing Lukashenko arriving at his Minsk residence carrying an automatic rifle. Let's get the latest from Bloomberg's Maria Tadeo. Maria, the European Union has said it stands with the people of Belarus. What exactly can they do next?
That's right. And I think the images that we saw yesterday, which were so powerful, to see people out on the streets in huge numbers in such a climate of hostility really taken to the streets to say Lukashenko has to go, will reinforce that spirit from the European Union. They've said it repeatedly now that they do believe the election was not fair, that the election was not transparent, and that they do not buy that Lukashenko won the election with almost 80% of the vote. When you look at the European Union right now, they've said they are going to go for sanctions. We still don't know who will be targeted, and we still don't know which sectors, perhaps, of the economy will be targeted. But that is something that the European Union has said they will do and potentially could do quick if there is violence against people on the streets and people who are protesting because of an election that they believe was rigged. Now, going forward, the EU has repeatedly said also that they don't want to see something that looks like a foreign intervention. The solution here will have to come from the people of Belarus, whether that is a new election, a compromise candidate. That is something they have to agree to, because it's a very fine line. The EU does not want to be perceived as almost putting forward a candidate that they like, but the Belarusian people have not agreed to.
Tell me about Russia. I mean, we know, of course, they've been playing a key role in supporting the incumbent government over the years. Have they taken a clearer position on how far they're willing to continue to do that?
Exactly, and look, there's two reasons here. One, of course, is just geography and geopolitics. Russia is close to Belarus, and there's almost like a sphere of influence still on the country. But if you look at what Russia is doing at this point, they're not doing much. You know, there was fear from the European Union that perhaps we could see a rerun of Crimea, where the Russian military just enters into the country and that turns into a full-blown civil war, like it almost happened in Ukraine. At this point, Russia is not doing that. They've also said that this diplomatic option of perhaps the constitutional reform that has been pushed forward by Lukashenko could work for them. The question is, would that be good enough for the opposition when it comes to Lukashenko? And what kind of candidate could come out of that? Because it's clear that someone that is perhaps too pro-European Union, too pro-NATO, may not go down well in Russia.
Maria, thank you very much for running us through those key points. That's Bloomberg's Maria Tadeo there. Well, here's what's coming up. It's the Republicans' turn. Trump travels to North Carolina to attend the semi-virtual RNC. Up next, we discuss what to expect in the four-day meeting, and we look at the stocks at the moment across the board, trading quite a bit higher on optimism when it comes to the ongoing battle against keeping the coronavirus in check, but also the thawing relations between the U.S. and China, or at least the initial signals around that. So stocks 600 there, up 1.4%. You've got some of the auto names leading the gains. Cable at 130.84, a little bit of dollar weakness creeping in here. U.S. 10-year yields pretty much unchanged. We'll get into a lot of these other key themes shortly. From Dubai and the rest of the world, this is Bloomberg.
day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, and politics. This is Bloomberg Surveillance. I'm Yusuf Gameldine in Dubai. Let's get the Bloomberg First Word news for you. Let's get you a wrap of some of the key stories. On Capitol Hill, the House has passed a bill to roll back cuts at the U.S. Postal Service. That's after concerns that the changes could hit mail-in voting at the November election. Lawmakers have allocated an additional $25 billion, but the Postal Service is concerned by some of the requirements. It says they constrain its ability to improve efficiency and reduce costs. European Union's top trade negotiator, Phil Hogan, is fighting to keep his job. That's after attending a Gulf Society dinner in Ireland during the coronavirus pandemic. He's apologized for the lapse, and that comes a day after the government said no events would be organized at cafes and restaurants. Hogan has a key role in trade talks with the U.S. and the UK. An explosion has hit a major natural gas pipeline near the Syrian capital of Damascus. According to state media, it is or has been triggered by power outages across the nation. No fatalities or injuries have been reported. Syria says it is treating the incident as a terror attack. Those were your first word news pieces. Let's get to the story around President Donald Trump. Well, he's traveling to North Carolina to attend the first day of the Republican National Convention. And most of the four-day RNC meeting will be held virtually, but delegates are meeting in Charlotte to formally nominate Trump and Vice President Mike Pence for a second term. Joining us to discuss this is Julie Norman, teaching fellow in politics and international relations at the University College London. Before we get into this, Julie, I want to get a quick reaction from you on the developing agenda out of Belarus over the last few hours. I've done quite a bit of reading around this symbolic kind of action that's been taken by some of the European Union leaders. And what is clear is that Europe has limited leverage over Mr. Lukashenko. And the bigger question is one where whether in this process you're getting closer and closer to risking a Ukraine-style new confrontation with Russia. What is your assessment?
Well, that's exactly the situation right now, where we see Belarus kind of stuck in this, trying to have a balancing act really between Russia and the West. We have the opposition challenging this contested election. You're trying to displace Lukashenko, who's been in office for over 26 years, known for censorship, crackdowns from police, what have you. But it's a real tension where even the opposition needs to show that they're not too Western-leaning, they're not too open to NATO and EU intervention, because that might invite more of a response from Russia and escalate the situation even more. So there is this balancing act. EU leaders right now trying to show their support, but as you said, really trying to walk carefully so as not to push things over the edge to prompt some kind of response from Russia and make it even harder for the opposition.
Julie, let's seg across then to the RNC agenda. What would you point to specifically that could perhaps come as a bit of a surprise as we try and speculate as to what we might see?
Yeah, well, the Republicans have been keeping the convention somewhat under wraps and are saying there's going to be a number of surprises coming. We know it is going to be more of a hybrid model than we saw under the Democrats, with at least some live events, including the roll call today in Charlotte, where both Trump and Pence will be present. But Trump will be making the convention as much about himself as possible. He's expected to speak every night of the event, culminating, of course, with the acceptance speech from the White House Rose Garden on Thursday night, followed by fireworks in the National Mall. So we're expecting a lot of Trump focusing on himself, on his personality, and on the brand that he has built up. The challenge for Trump is going to be trying to expand beyond his base. He has this loyal following that has stuck with him through the ups and downs of the polling. But the challenge for Trump and the party more broadly will be see if they can expand that a bit further out.
To what extent are U.S.-China tensions going to feature in any of the speeches, would you say? Is it going to be as prominent as it was last time around?
It probably won't be as prominent as it was. Of course, Trump's tough on China stance has been pretty consistent throughout his presidency, and we've seen that really up into recent days. However, with the other crises currently facing the U.S. and, of course, the world, the pandemic, the economic situation, protests, that's more where we'll see Trump's emphasis. We saw in his press conference yesterday, he's going to be trying to show that he's out in front and aggressive on corona treatments and potential vaccines. He's going to be positioning himself as a law and order president, and he's going to be trying to contrast himself to Biden, suggesting that he is the one to lead the U.S. out of the crisis, and trying to, knock Biden on statements as of, in terms of reimposing the lockdown, saying no, instead he's the one to reinvigorate the economy. So we'll see Trump really trying to double down on the fact that he did have the country at a strong economic position before Corona, and trying to double down on the fact that he can get the country out of that afterwards.
And perhaps some closing thoughts as well as we try and get our head around a very busy week when it comes to the RNC. One more key point you'd like to make.
Yeah, well, just that again, this is the polls right now have Biden ahead by, double digits going into today. But we can expect, of course, a bump for Trump after the convention, and really just a narrowing as it gets closer to the election. So I think for Democrats coming out of what was seen as a very successful virtual convention is just the fact that Biden, Harris will need to stay on message as Trump gains his own momentum as we get closer to November to ensure that there is turnout for Democrats as well as for Republicans getting closer to the election.
Julie, it's been great having this conversation. Thank you very much for that. That is Julie Norman, teaching fellow in politics and international relations at UCL. Let's talk about some other key trends, because Nouriel Roubini is warning of a sluggish W-shaped recovery for the global economy, or even another slump unless a coronavirus vaccine is found. Now, even as equities hit record highs, the founder of Roubini Macro Associates says companies and households continue to struggle, highlighting the disconnect between markets and the real economy.
There are some medium-term challenges that we're facing. We're in a world in which public and private debts are rising, and they're going to become even bigger given the response to the crisis. We have the risk of global pandemics becoming recurrent, global climate change. This Cold War between US and China is getting worse. Geopolitical risks are rising. There are serious political uncertainties about the US election, about the shape of the recovery. Started like a free fall, then for a while people thought it would be a V. This V is becoming a U. The U could become a W if we don't find the vaccine, if we don't have enough policy stimulus.
Nouriel, I want to look forward, given the assumptions and certitudes that institutions have right now. The great model, Nouriel, that we have is there's a bridge out there, and we should invest or act according to that bridge. Do you believe in the bridge, and can it get us to 2022?
I worry because before the crisis, there was a massive leveraging of the corporate sector in the United States, but also in many other parts of the world, including emerging markets. And given the COVID shock, most firms have to deleverage. Deleverage means to spend less, save more, and doing less capex because there is a glut of capacity. Now, how you spend less? Your main costs are labor costs. But your labor costs are my labor income. So the deleveraging of the corporate sector implies that there'll be much more sluggish labor income. First, the workers are fired, and if and when they're going to start to be hired, they're not going to get full-time jobs with full wages and benefits. There'll be more gig workers, part-time workers, hourly workers, contractors, freelancers. That means a huge amount of uncertainty and risk aversion by the household sector that is also highly indebted. So you're going to have also deleveraging by the household sector that have to spend less, save more, and do less residential investment. And that deleveraging of the private sector implies at best a sluggish U-shaped recovery, and at worst, if we're not doing the right things in terms of controlling the virus and we don't find the vaccine, that you could become even a double dip recession.
But Nouriel, if you look at the markets, they're going up. So, you know, you've basically, you're saying that we're going through 10 years of misery. The market keeps on going up because of central banks. So, you know, who's right? Does the economy catch up with the market, or does the market catch up with the economy?
Well, as you pointed out, you know, we have zero policy rates, if not negative. We have long-term interest rates in the US at best at 60 basis points, in parts of the world, zero, if not negative. Central banks are even buying high yield and high grade bonds, so those spreads are squeezed and you don't get much in credit or fixed income. And therefore, people are going into stocks, but not because there is a very strong recovery of earnings. I mean, you have, 5 companies, the big tech within the 500 of S&P that are doing well. The rest of them are not doing well. So it's all driven by further multiple expansion rather than a real recovery. And what's good, by the way, for Wall Street is bad for Main Street, because Wall Street represents what? Big firms, big tech, and big banks. What's Main Street? Workers, households, and small and medium-sized enterprises. We know that hundreds of thousands, soon enough, of small shops, retailers, and others are going to go out of business, while the market share of big business is going to rise, and that's driving Main Street down. That creates tons of jobs in the SME and makes the big firms even bigger in terms of market shares. And as I said, if the firms are going to survive and thrive and achieve the earnings target by slashing labor costs, your labor costs are my labor income, my consumption, and eventually that slump of consumption is going to weaken earnings and profits down the line. So I think that the stock market doesn't reflect the real economy. Mainstream is struggling. It's struggling severely.
That was Nouriel Roubini there speaking earlier. Well, coming up, Aramco's shake up, the world's biggest oil company, reshapes its management as it faces up to a world of low crude prices. And the latest on that next. This is Bloomberg. You're watching Bloomberg Surveillance. I'm Yusuf Gamenedine in Dubai. Well, let's get to the Bloomberg Business Flash stories again. And some of Alibaba's biggest investors have converted billions of dollars in U.S. shares for Hong Kong stock. That's in part to avoid potential U.S. sanctions and the delisting of major Chinese tech companies. It is a sign that rhetoric from the White House is prompting investors to take measures to avoid the fallout. China's banking regulator has pledged its backing for Hong Kong as a finance hub. It's reiterating its commitment to opening up the Chinese financial sector. The comments come during a deepening standoff with the U.S. It's forcing global banks to walk a tightrope between the two world powers and competing rules as well. Goldman Sachs expects almost a quarter of temporary layoffs in the United States to become permanent. It says some 2 million could remain unemployed well into 2021. While the transition rate from temporary to permanent layoffs remains historically low, figure is nearly double from June to July. And that is the Bloomberg Business Flash update. Now, Saudi Aramco has reshuffled its senior management, putting a top executive in charge of portfolio optimization. And that's as the world's biggest oil producer adjusts to the reality of $40 crude prices. Joining us now is Bloomberg's Middle East energy and finance reporter Matthew Martin. Matt, again, the aggressive recalibration within the business at Saudi Aramco tells a story of a lot of headwinds that are expected to come for the oil industry.
Yeah, I think you're right. And this is a sign that, I think Aramco is adjusting to the reality and the risk outlook of oil prices that look lower for longer and the very uncertain demand recovery picture. And is starting to think about what that's going to mean for the business and obviously for this huge $75 billion dividend.
Taking on our challenge. You're going to build your own brand in the next 5 days. Or
goes to the Saudi state and provides a huge bulk of government revenue. So in amongst that environment, I think this is a sign that Aramco is looking at, is increasingly going to be looking at its portfolio of assets, looking at things that it can monetize, looking at the investment commitments that it has around M&A and acquisitions and new investments, and taking a much tougher look at some of those things than perhaps it would have done compared to where oil prices were 12 months ago.
Saudi Aramco shares in the Tadawul trade at the moment slightly positive. What will this new corporate development unit now be tasked to do first, so we have a bit of an idea of what's at the top of their agenda?
Well, I think if you look at some of the things that the company has announced over the past few years, the big capital commitments, there's investments in China and India, there's big domestic projects that are all on the cards. So this new unit is going to be looking at all of that M&A. I think one of the first things that they're probably going to be focusing on is going to be the sale of a stake in the oil pipelines business, which Aramco has. That's going to be a way that will bring many billions of dollars into the company if that's completed. And as it looks at trying to find new sources of cash while oil sort of sticks in this kind of $40 a barrel range, I think we may well see the company start to push fairly aggressively on getting that deal done. And then the question will be, what are the next assets that can come after that to try and raise some money from?
Matt, thank you for that update. That's Bloomberg's Middle East energy and finance reporter Matthew Martin there joining us. Coming up, Turkey says its natural gas find in the Black Sea is just the beginning. Our exclusive interview with President Erdogan's spokesperson is next. This is Bloomberg.
climate change is the defining issue of our time. So we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, and politics. This is Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. We have quite the risk-on rally across assets, but especially so in some of the world's equity markets. Here is the state of play. In the stock 600 in Europe, we're up 1.7%. Tech and cyclical sectors are leading the gains. Remember that what is helping are signs of easing U.S.-China tensions. That's definitely helping put a floor under all of this. You got your Italian bond yields, outperforming some of the euro area peers. We have Italy's health minister ruling out a new lockdown. U.S. treasuries are steady. In the FX space, you're looking at euro-dollar, currently 118.24. This is a weaker dollar story. And then Brent crude, a little bit of upside there as well, getting a firm lift, up about 0.7%. The net long position, least bullish in 3 weeks when it comes to money managers, according to the CFTC data. But I want to flip the board here and show you this powerful story of U.S. equity futures that are called substantially higher, to the tune of 0.7% for the S&P 500 mini. And this would imply an open that would build on record gains. So that is where we are at the moment. Let's get to Turkey now, because, well, the country says its natural gas find in the Black Sea will likely be followed by further discoveries. President Erdogan's spokesperson, Ibrahim Kalin, spoke exclusively to Bloomberg about how that could alter the geopolitics of energy trade in the region.
This is a major discovery. This is the first ever largest discovery of any natural gas resource in our continental shelf in the Black Sea or in the Mediterranean or Aegean. It's a result of years of work on developing our own capacities for not only energy but for our economic abilities to explore, partner with other countries, develop this technical capability, and it's also a result of a different approach to our own geography, actually. For a long time, the famous statement that geography is your destiny has been used in a rather negative sense, but here it has a positive significance. Turkey is surrounded by 3 seas, major seas, and now we have found natural gas in the Black Sea. That's really, really important for Turkey's economy. Turkey has been a transit country in the energy sector. Now Turkey will be an energy-producing country. That's a new dimension, a very significant one. That makes Turkey more than just a producer of energy, but it puts Turkey at a different level in terms of strategic location, relations, regional and global affairs.
And how likely it is for Turkey to find more gas in the Black Sea, based on your initial findings in the Tuna 1 well? Based on what our technical experts are telling us, there is a much greater potential. It's just the beginning of what they've discovered yesterday. And it's quite likely that as they continue this drilling over the next few months, they will be able to make a deeper assessment of what is available there. But the chances are that it will lead to other fields. And in terms of drilling, after the Tuna 1 well, which I understand is not complete yet, they're still continuing to spud deeper into the earth, but there are going to be new exploratory wells in the same region that's going to be immediately drilled.
True, that is true. So the work will continue for exploration as well as drilling at the same time. Because we're very hopeful that it will lead to other fields in the same area, next to Tuna 1 and perhaps in other areas as well. And of course, we will continue to explore in other parts of the Black Sea, as well as in in the Eastern Mediterranean, in other parts of the Mediterranean, around Cyprus and other places as well. So we are very much hopeful.
That was our conversation with President Erdogan's spokesperson, Ibrahim Kalin. At the moment, the market looking past, though, this major gas discovery in terms of how they assess Turkey's fundamentals. Dollar, lira, at the moment, well, depreciating for a third straight day. We're at 7.35 at the moment, off by about 0.6%. Remember, it is broadly a weaker dollar story. And as we look towards the remainder of the week, the big question is going to be not just what happens with U.S.-China tensions or the ongoing U.S. election variables, but also the Jackson Hole summit with the speech by the Fed chair expected. The question is, are we going to get any indication around potential inflation targeting? And then how is that going to ripple through to some of the key assets? A lot to consider, and we are, of course, across it throughout the day and onwards. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
This morning, the surge of last week continues. The FTSE up 22% off the bottom. The American S&P 500 up 51% off the bottom. The difference is American digital dominance. There are sure signs of inflation. Lumber in America, a moonshot. Iron ore in China, a moonshot. Against that, a quote, incomplete recovery. Look for sustained unemployment. And virtual Trump will be different from virtual Biden. Lose a Zoom, bring in the fam, Trump Jr. tonight, then the First Lady, then Mrs. Eric Trump, and on Thursday night, Mrs. Kushner introducing her father. Good morning, everyone. This is Bloomberg Surveillance. I'm Tom Keene in New York. Anna Edwards in London, in for Francine Lacroix. Anna, I looked at the death statistics from the pandemic, and the success of the United Kingdom is absolutely extraordinary. The way they have brought down deaths in the pandemic is just superb compared to America and, frankly, many, many other countries. Can you feel that in the nation? Is a nation aware of the success of that?
It feels very different, actually, I have to say, Tom. I mean, bringing them down is one thing. Allowing them to spike up in the first place is another. A lot of criticism around the government and how it handled the initial stages of the outbreak, certainly, and in particular the care for the elderly and allowing it to take off to the degree it did in care homes.
No, it's interesting to see, but folks, we'll be covering this through the week. Of course, a lot of this with Johns Hopkins University as well, but this pandemic continues, and all of us knows this final week of a summer. In America, folks, late Labor Day, September 7th, so it's sort of an odd end of the summer, at least here in America. Right now, on Monday, First Word News Briefing, here's Ritika Gupta.
From recovered patients will be expanded to more sick Americans. It widens access to the promising therapy even before researchers fully understand how it works. The Financial Times is also reporting the White House is considering fast-tracking the Oxford AstraZeneca vaccine. One of President Donald Trump's longest-serving aides is leaving the White House at the end of the month. Kellyanne Conway, the first woman to manage a winning presidential campaign, says she's quitting to focus on her family. Her husband is also leaving a campaign group committed to defeating President Trump. Conway says the two may disagree, but they're united on what matters most, their kids. And in the UK, Prime Minister Boris Johnson is urging parents to send their children back to school next week. That's as concerns grow amongst teachers and union officials that it isn't safe to do so. The government is arguing that the risk to a child's development is greater than the risk of the coronavirus. And the first ever Champions League final without fans. Bayern Munich defeated 1-0 last night. Only a few hundred people were allowed in the stadium due to pandemic restrictions. PSG has yet to lift the European Cup despite spending more than $1 billion on players in 9 years of Qatari ownership. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Anna.
Ritika, thanks so much. It is an extraordinary 2020. We all know this. We just have never seen a year like this. It's an extraordinary August, maybe only equivalent to the trauma of 1998. And with it is a swirl, the back and forth of all the data. I'm particularly looked over the weekend at the inflation dynamics. And of course, the data today, futures up 23, a surge here. There's no other way to put it, a continuance of what we saw Friday. That 10-year tips, the inflation adjusted tips, negative 1.00% as well. Dollar churning as well. I'll leave it at that, Anna. What do you have on the data front this morning?
Yeah, I bring you only upside on my data check this morning, Tom. Stocks in Europe really flying up by more than 2% on some of these markets. The CAC and the DAX both up by more than 2%. It seems optimism around tech in Asia, Tom, strangely lifting sentiment here in Europe. Prosus is the expression of that. That's a Dutch listing, holds 30% or so of Tencent. And so when we see better talking between the US and China on tech, that's lifted Tencent in Hong Kong. It spreads over via Prosus. I put AstraZeneca in as well because, of course, of that story over the weekend that suggested perhaps we'll see earlier than previously thought approval for the vaccine being worked on by AstraZeneca and Oxford. Lots to talk about this morning.
And I think we've had a lot of cross currents of the guests, in particular the time you've spent with us in the last week or so here on Surveillance. And what I find fascinating, folks, is a different kind of beast, and that is a strategist and economist who melds both things. I think of Steve Whiting and Citigroup as an example of that. And our guest to start us off strong on a Monday, Anna, is one of those guys who's a strategist and an economist at the same time.
Yeah, absolutely. So let's get to him. Peter Dixon, Commerce Bank Global Equities Economist. Perfect to talk to you then, Peter, this morning, as Tom suggests. Let me start with the underperformance of European stocks. Tom mentioned this at the start of the program. European stocks far behind US stocks when you look at year-to-date performance. Obviously, that is a lot to do with tech stateside. Can Europe catch up?
Probably not, I think, is the answer. Because as you rightly pointed out, it is largely down to the composition of the index. I mean, if you look at the FTSE, for example, it's overweight banks, it's overweight energy, both of which are sectors which have struggled, certainly relative to tech. And it's unlikely that we're going to see any great turnaround anytime soon. And I think that as tech continues to soar into the stratosphere, the divergence between tech-heavy indices and the rest of the world, if you like, will continue to widen. But I think it's probably fair to point out that the performance of the European stocks is probably more representative of the sort of average corporate performance, if you like, than the S&P, because that's being driven by effectively 5 stocks which are sending and shooting into the stratosphere, and that isn't representative, I think, of the pain that many corporates are feeling right now.
Do you have a sense of a catalyst that could change the path for tech dominance, Peter? Is a vaccine, more news on a vaccine, is that going to be the thing that dethrones tech in the fall?
Good point. It could be one of the things which certainly allows the rest of the market to catch up. I don't think it will dethrone tech in that sense. I mean, I think there has been a significant shift in the way in which we're going to work in future, and that will, I think, be embedded in tech values for a long time to come. But so long as the tech sector continues to post decent earnings growth, more or less in line with expectations, the market is expected to hold up. And I don't think there's anything which is likely between now and, say, the release of the third quarter earnings numbers, which is going to destabilize that. But of course, there's always the rounding effect, and that's the thing we're all a bit concerned about.
Peter Dixon, Tom Keene in New York, good morning. One of the great things I saw over the weekend was a raging debate over inflation. Clear short-term inflation due to supply shocks, lumber, iron ore, groceries. We all see it at the grocery store. What is the medium-term outlook? Do you actually suggest a new pernicious or rising inflation, or it will be one big fake medium term?
Well, morning, Tom. I think my view on inflation is that it's going to be very difficult to generate much inflation in the near term or even in the medium term, largely because we're not going to see much wage growth. You're quite right. In certain markets, there are shortages which are leading to short-term price boosts, and we're seeing that in certain parts of the commodity market for sure. But I think in the longer term, if we're looking at a world in which there's going to be relatively high unemployment compared with the past, I mean, that's likely to continue to depress wage inflation. And I think that will spill over into price inflation. And I think that central banks will likely continue to struggle to get inflation back towards their 2% targets for some time to come.
How big is the supply disruption right now? I mean, it's obvious in America. We look at the price of lumber, which is truly a moonshot, folks. But do you think the supply disruption theme is valid?
Oh, definitely. I mean, I certainly think it's a big story. I mean, some anecdotal evidence. I mean, if you go online shopping, for example, and try to do your grocery shopping online, the huge range of products that existed prior to the pandemic really no longer exists. You're limited to a much smaller range of choices, and I think that is reflective of the supply disruptions that we're facing. It's going to take some time before a large number of companies can rebuild their inventory. I don't know how long that's going to last, but certainly it's not something I would expect to see normalize very quickly. And I think over the course of certainly the remainder of this year, that normalization process will likely be a fairly slow one.
Peter, do you think the Fed has to rethink and will rethink and tell us its thoughts on inflation targeting this week, or do you think we'll have to wait till September for that?
I think this is a long-running story. I mean, I think basically the Fed is probably going to have to, and indeed all central banks, are going to have to rethink what their monetary strategy will be in the medium to longer term. I mean, in the short term, they've done a great job. They've pumped the markets as full of liquidity as they probably can, and they would say they can do more. But I think in the longer term, and this goes back to the inflation story, the question is, do they think that high inflation is going to be a problem in the future? And I suspect the answer is that they think it probably won't be. And as a consequence, they're probably likely to relax their sort of their inflation targeting methods, maybe not immediately, but certainly over the longer term. And I think this week might see the first signs of a discussion about that, in which they target price levels rather than, single-year inflation rates. And what that will mean is that in the medium term, they may well be prepared to allow inflation to overshoot the target, if ever we get to that position, rather than combat it with a tightening of monetary policy, simply in order to allow inflation to average, say, 2% over the cycle.
Peter Dixon, thank you so much with Commerce Bank, and he will continue with us this morning. We've got lots coming up, and particularly a look at the Republican convention plans that we will see through the week. Lots to talk about there, certainly. Coming up, though, Savita Subramanian of Bank of America's Securities, a lot of work there on quantitative strategy and really ties it in wonderfully to ESG. That'll be a wonderful update in the 7 o'clock hour. What you need to know, as Anna Edwards mentioned, green on the screen in Europe, American futures up 23, the VIX 22.69. This is Bloomberg. Stay with us.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
Surveillance. Good morning, everyone. And Tom Keene in New York, Anna Edwards in for Francine Lacroix in London. Peter Dixon with us of Commerce Bank as we look at this linkage between equities and our economics as well. Peter, one of the things I really noticed this morning in risk on is yields don't go with it. Are yields in equities linked right now? I don't see yields really driving higher as you would expect in a risk on feel.
True. I mean, if you look at what's happening to the bond markets overall, I mean, they seem fairly static. We're in a comfortable position, I think, where they're being, supported by government purchases. Investors are still keen to get involved, but they're not driving prices higher or indeed lower. And I guess that's a good thing for equity markets in the sense that we have a very stable yield environment, a very stable discount factor to work off. And I think that given that markets expect yields to remain low for a very long time to come, as we get more clarity on the earnings numbers, it's likely to drive equities just that little bit higher.
This is a really important insight, folks. The idea that equities are driving higher, and, not just tech, but equities in general, but we're not doing it within a higher yield regime. What happens, Peter, if we get to a higher yield regime?
Okay, well, we're talking about, I think, something at the tail of a distribution, but it's not impossible, of course. I mean, if we do get there, and I guess it depends, how much higher yields you're talking about here. But if we start to see a significant rally in yields or sell-off in the bond market, then we'll start to see investors, I think, looking a little bit more askance at the equity market. I mean, one of the reasons for continuing to buy at the moment is they're getting decent dividend yields, certainly vis-a-vis 10-year yields. And I think that would certainly be sufficient to take the edge off the equity market. I don't know about an outright decline, but certainly take the edge off. It's not something I would expect to see anytime soon, primarily because I don't think we're going to see any action from central banks, which is going to upset that particular picture. The only thing which might change things is, and this goes back to your previous point about inflation, is if we see an unexpectedly large pickup in broad inflation, that would certainly change the picture for the bond market. But again, it would also mean that selling prices go up as well, so it might also support equities as well. It may not change the picture as much as you think.
Peter, that's interesting. And talk of where inflation heads and where interest rates and yields go makes me think about where the gold price is going to head to next. Clearly, it's been a strong haven during times of crisis, but I see it stronger today. You've got some of these European equity markets up by more than 2%, and yet gold prices go higher. Does it suggest that there's just more of a liquidity role for gold prices? They're pretty liquid, and so people don't necessarily buy and sell them as a haven, but more just because it's a very liquid place to put your money?
That's possibly true, and certainly that's been facilitated by ETFs over the course of recent years, and I think a large chunk of the surge that we saw in the first half of the year was driven by ETF buying, and obviously that enhances the liquidity of the market. But I think we're in a situation where investors do need to have some form of diversification. Obviously, that is, again, going back to your point, enhanced by liquidity. But if we look at a market in which equities are going up, it's great, but you can't put all your money there. You need some alternative assets. You have pretty much zero opportunity cost of holding gold, and it just makes sense to diversify into the gold market a little bit. It's not necessarily going to give you a huge lift from where we are now, but I think it just gives investors a little bit more certainty to their portfolios.
Do you have, I'm thinking about things that move the gold price then, and another one I didn't mention is the dollar, Peter. We've talked a lot, Tom and I, in the last week or so about the weakness in the dollar and what that means. Are you somebody who thinks we have questions to answer about dollar dominance, about the dollar as the global currency, or do you think that is a red herring? Actually, dollar dominance is here to stay.
These things which comes up periodically, every time the dollar goes into a bout of weakness, and most of it, we look at the dollar and think, there are good reasons why the dollar may not be quite as dominant in the future as it has been, but and one of these times, I mean, I think we have to be careful not to conflate the dollar's position with general market sentiment concerns regarding the Trump administration, for example. Now, that could easily dissipate over the course of the next, 3 or 4 months if Joe Biden is elected into the White House. And then, of course, I think there's been a lot of positive sentiment towards the euro over the course of recent months, given that it managed to sign a deal which provides support to some of the weaker members of the eurozone. But again, don't forget that the eurozone is sort of a monetary union only. It's a collection of sovereign states which share a common monetary policy, and that's not a guaranteed recipe for stability. So, much as we'd like to think that there might be concerns surrounding the dollar's dominance, I mean, I think it's going to be the primary reserve currency for quite some time to come.
Peter Dixon, you are an economist and you work for a bank. So let me ask an unfair question to an economist and an unfair question to someone working for one of the world's great banks. When do the banks finally go, or are they the mother of all value traps?
I mean, I think there's banks in particular they've suffered as a consequence of what happened 10 years ago. And I think, obviously, if you look across the bank universe, and clearly banks look undervalued. I mean, I rather suspect that over the course of the coming years, as banks start to address the cost problem, particularly in Europe, you'll probably start to see a significant, well, a rally, but maybe not significant, but you start to see a rally in banks. I mean, they look attractive on many grounds. Certainly, price-to-book ratios are an attractive reason to want to buy them. But, I mean, I think investors are justifiably cautious. The banking landscape hasn't moved, perhaps, as rapidly as many investors would like to see, and there are more attractive sectors out there. So I think for the moment, investors will continue to shun them. But I think if you're interested in a long-term play, if you pick the right winners within the sector, you may find that it turns out to be a good trade, but it'll take you 5 or 10 years to find out.
Peter, thanks very much. Peter Dixon, Commerzbank Global Equities economist, joining us here on Surveillance. We'll talk more about the banking sector a little bit later on during the programme. And later this week, follow Bloomberg for our coverage of the Jackson Hole Economic Symposium. That's starting on Thursday. Jay Powell will be speaking at that event, of course. It will be a lot more virtual than it is usually, but it will be taking place and we will have coverage. This is Bloomberg.
Sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishka Gupta. Let's get your Bloomberg Business Flash. Goldman Sachs expects almost a quarter of temporary layoffs in the U.S. to become permanent. It says some 2 million could remain unemployed well into 2021. Whilst the transition rate from temporary to permanent layoffs remains historically low, the figure nearly doubled from June to July. Saudi Aramco has reshuffled its senior management. It's putting a top executive in charge of portfolio optimization. That's as the world's biggest oil producer adjusts to lower crude prices. Aramco says the new department will assess existing assets and boost access to growth markets. And that's your Bloomberg Business Flash. Tom Anna.
Ritika, thank you very much. Quick check of the data then, Tom. We are stronger across European equity markets. It's risk on in Europe, up on the CAC and the DAX by more than 2%, Tom. Only one sector in negative territory today here in Europe. That is travel and leisure.
Very good, Anna. Last week, the Democrats. This week, the Republicans. This week, President Trump. Coming up, Leslie Vinjamuri will join us from Chatham House, and we will speak of the Republican National Convention, much of that taking place at the White House. Leslie Vinjamuri next. This is Bloomberg. Futures up 23. Dow futures up 215. There is no red on the screen. This is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Good morning, everyone. Bloomberg Surveillance on a Monday. Anna Edwards in London. I'm Tom Kinney, New York. What you need to know, big lift to the market, huge move up here coming off the Friday festivities. Futures in the Dow above 28,000 right now. We begin our coverage on a Monday out of London with Leslie Vinjamuri on the Republican National Convention. No, it will not be held in a big arena like the Democrats. It will be very virtual, but it will also be very, very different than what we saw last week with the Democrats. Leslie Vinjamuri has a real nice sense of history here as well. Leslie, at this convention, is there a Republican Party?
Well, Tom, you ask, as always, exactly the right question. It's not only is there a Republican Party now and who is it, but it's also going to be where does this Republican Party go after November, depending on that outcome. But what we're going to see, this Republican Party doesn't look very much like it used to. It's going to have all four of President Trump's children very much part of the show. It will have Nikki Haley, who's obviously been in the administration and is now part of the party. But many of who we think of as being the long members of the Republican Party, they were at the Democratic National Convention, several of them. We're going to see a lot of President Trump every single night. We will see President Trump for a full hour. He will accept that nomination at the White House with an audience outside Thursday evening. Very unusual.
Right. Well, what's interesting here, Leslie, to me, I read Joshua Green, a wonderful reporter for Bloomberg Business Week, and the Bannon expert in the world, and Steve Bannon going back to the National Unionist Party of Abraham Lincoln, and then you move to the Bush set of presidents, and then you move on to Mitt Romney and his efforts as well. Where do those people go if the president wins?
Well, I think this has been, a real question for so many longstanding Republicans is where do they go? And there's a real question about Congress, too. What we are told is that there are probably 60 Republicans in Congress that don't like what the president's been doing the entire time, but they've been relatively quiet. And we have, the Republicans that are very vocally against the president. And where do they go if President Trump is reelected? I think that there's going to be, very careful consideration about whether they really back the Democrats. We're seeing what we saw last week at the Democratic National Convention was Vice President Biden trying to really be the party of unity across young, across old, across different demographic sections of Americans' population, but also across Republican and Democrat. And, as we head up to the beginning of this Republican National Convention today, we see a president who's on the back foot electorally. He's down in the polls. The economy is down. He is grabbing for straws, trying to say that he'll get a vaccine early, cutting corners on FDA regulations, heading for a fight probably on that, announcing that he'll use certain therapeutics. But he's really, on the back foot. And it's very unusual for an incumbent president to be approaching a convention in this way.
And Leslie, good morning. Good morning from London. Let me ask you a bit about the types of voter that Trump and the Republicans are going to be trying to go after this week. Are we going to see them attempt to reach out to new groups, to groups away from the base, or is this going to be about trying to consolidate what they previously had?
I think there are two things here. One is clearly they are, this is the reason to put President Trump on stage on live television every night, is to really rally his base, make sure that they are enthusiastic, that they turn out. But I think there are a couple things that they're trying to play for. One is suburban women, right? They're driving for this picture of America, that Americans are on the streets protesting for racial justice, that there's a lack of law and order, and that President Trump will be the face of law and order. And I think that there will be some courting of that vote. There's a play, I think, for the Asian Americans, especially the Indian Americans. We'll have Nikki Haley speaking, and I think there's kind of a tussle between Kamala Harris and Nikki Haley, and a question of whether that demographic can move. And then if you watch, the very unusual Secretary of State Pompeo will be speaking from Jerusalem. Remember the controversy over the American embassy being moved from Tel Aviv to Jerusalem. But this is, I think, a play really to court the evangelical voters. That evangelical voter base has been very important to President Trump, but he's done things that cannot sit comfortably. If you go back to family separation and any number of policies that are challenging, we've seen moments where they've begun to peel out, but I think rallying that base by speaking from Jerusalem is something that the president is playing for. Whether he can actually move new voters, independent voters, very uncertain, but this is really all about trying to do that.
And how will the U.S. economy and the plight it faces, Leslie, play into this? Usually the U.S. economy quite high up there on the list of things that voters care about, but of course it's been driven and overshadowed by the virus this year.
Well, I think it's both. I mean, you're absolutely right. The number, it's the election is about the pandemic, and the pandemic. And that means the health crisis, the economic crisis, and also the social unrest that it's driven across America that still continues today. And President Trump is, I think, going to, it's a very difficult play to make, but he's going to try and make the claim that the only way to get the economy back on track is for him to lead the country out of this current economic crisis. He will paint the Democratic Party as a party of the left, a socialist party that will erode his tax cuts, that will remove them, that will raise taxes, that will enact policies that are costly. And I think that is a line that he will be trying to drive. The difficulty is when we have millions of Americans out of work and no clarity on a national plan for recovering from the virus. It's a very difficult play to make.
Leslie, one final question, and I give this to you with our international audience in mind. When the president talks about the deep state, what is that?
Tom, I lost you there just for a second.
What is the deep state? Define the deep state for us.
Yeah, we've been talking about the deep state since President Trump was elected because he's always felt like the civil service, the executive branch, those employees who have worked their entire lives in the CIA, the FBI, across the government, are against him, that they're trying to keep America going in the same direction despite his effort to change things for the better, as he would say. And he has always felt that the Washington establishment, what Ben Rhodes calls the blob, as well as the deep state, is pushing back against him. He certainly feels it in this election. He's tried, I think, throughout his time as president to play the outsider. It's very difficult to do when you've been in the White House, in charge, making policy for 4 years. But this is still the tack that he's trying to take.
Terrific briefing. Thank you so much. Leslie Benjamin with Chatham House, head of the United States and the Americas program. Really, really quite good. With the news in New York City, our first word news, here's Ritika Gupta.
Thanks, Tom. The European Union's top trade negotiator, Phil Hogan, is fighting to keep his job. That's after attending a Gulf Society dinner in Ireland during the coronavirus pandemic. He's apologized for the lapse that came a day after the government said no events should be organized at cafes and restaurants. Hogan has a key role in trade talks with the US and the UK. On Capitol Hill, the House has passed a bill to roll back cuts at the U.S. Postal Service. That's after concerns the changes could hit mail-in voting at the November election. Lawmakers allocated an additional $25 billion, but the Postal Service is concerned by some of the requirements. It says they constrain its ability to improve efficiency and reduce costs. In recordings obtained by the Associated Press, President Donald Trump's sister is heard criticizing her brother, saying he has no principles. The former federal judge, Marianne Trump Barry, was secretly recorded by her niece, Mary Trump, who recently released a book denouncing the president. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Manor.
Thanks so much, Ritika. Greatly appreciated. A virtual Democratic convention, a virtual Republican National Convention, a virtual David Weston, along with Kevin Cirilli. Look for that tonight, starting at 10 p.m. Really looking forward to our Republican National Convention. Coverage, as you heard from Dr. Benjamin, it will be original, to say the least. Stay with us. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
I'm Anna Edwards in London with Tom Keane in New York. Belarus, the president of Belarus, Alexander Lukashenko, is facing more pressure to resign. Tens of thousands protested in the country's capital this weekend. Meanwhile, the Russian foreign minister, Sergei Lavrov, accused the opposition leader in Belarus of harboring an anti-Russian political agenda. Joining us now is Bloomberg's Tori Clark in Moscow. Tori, good to speak to you. There do seem to be quite a lot of voices in this, trying to keep other parties out, trying to make this an entirely Belarusian affair, trying to not have foreign powers intervene on either side. To what extent is that likely to last?
Hello. Clearly, the president of Belarus, Alexander Lukashenko, is trying to make this into a larger geopolitical issue, trying to play East and West off against each other, most likely to bring Russia in as support against the opposition. In general, it started out fairly domestically. It was a protest movement against the president. The opposition side has not voiced any strong Russian Western position. They've said they are interested only in changing the government and then working with allies.
Do you think you see any signs that Lukashenko is on his way out by whatever means?
It's very hard to tell right now. He is still in power and he's vowed to remain in power. The opposition has been peaceful. The protests are very large. One area that's key to watch is how the independent labor unions are going to, can they draw together and really force a nationwide strike, or will Lukashenko be able to keep them splintered and force state companies to continue working?
Troy Clark, Tom Keane in New York, good morning. What I find interesting in the coverage in the West, the Bloomberg coverage, New York Times and others, is the aloneness of this guy. How alone is he, and how does Mr. Putin adapt and adjust to his loneliness?
Lukashenko has really one main ally, and that is Russia. He has failed to build up alliances in Europe or chosen not to. His actions have drawn censure and sanctions at times from the U.S. and Europe. So in terms of who can he turn to, it's Russia.
So what is the determinant for Mr. Putin to keep this guy or move him out and move somebody else? It's as basic as that. What is the single factor that matters to Mr. Putin?
Belarus is the sort of the main buffer standing still, one of the last Soviet republics that stands between Russia and the European Union and NATO, and one of the few that remains very friendly towards Russia. That said, Lukashenko has also turned against Russia at times. He's been cantankerous. He's been very fierce about remaining independent from Russia and has accused Russia of meddling. Earlier this year, he was turning against Russia in the run-up to the election before he did an about-face and has told Russia that if Russia doesn't support him right now, then European forces could charge through Belarus and end up attacking Russia.
We've seen images, Tori, of the president of Belarus, dressed all in black, in a bulletproof vest, surrounded by special forces, trying to portray himself as in a very strong position here. What do we think how high do we think the bar is for Russia to come in and support him in this act? Do you think the bar is pretty high, actually, for Russia to get physically involved on the ground?
So far, well, Russia has definitely come out with rhetoric supporting Lukashenko and demanding that there be no external meddling in the country's affairs. There has been no sign that Russia is willing to actually send in physical support. That would be a major step. We've seen how that played out in Ukraine, and that has led to sanctions against Russia and an economic and geopolitical hit to Russia.
Tori Clark, thank you so much. From Moscow, leading our coverage here on this really fascinating story. Certainly Europe riveted by this, but I'd say in the United States it's a bit off the radar, but nevertheless front and center, particularly with the NATO story on the Eastern European front. We'll advance this discussion. Ian Bremmer with us in the 8 o'clock hour. That'll be a good time to catch up with Dr. Bremmer. A number of themes, including the Secretary of State speaking to the Republican National Convention, speaking, I believe, from Jerusalem. Stay with us. You need to know risk on futures up 25. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
This is Bloomberg Surveillance. I'm Rishka Gupta. Let's get your Bloomberg Business Flash. Some of Alibaba's biggest investors have converted billions of dollars in U.S. shares for Hong Kong stock. That's in part to avoid potential US sanctions and the delisting of major Chinese tech companies. It's a sign that rhetoric from the White House is prompting investors to take measures to avoid the fallout. And China's banking regulator has pledged its backing for Hong Kong as a finance hub. It's reiterating its commitment to opening up the Chinese financial sector. The comments came during a deepening standoff with the US. It's forcing global banks to walk a tightrope between the two world powers and competing rules. And that's your Bloomberg Business Flash. Tom, Anna.
Ritika, thank you so much. We need an update from Christopher Ailman. He is at Kelster's, our Chief Investment Officer, the Giant Pension Fund. And, of course, he's looking at the giant headache, which is tech to the moon. Let's listen.
The FANG, MA stocks, or now we got to add a T in there for Tesla. Those are all doing well because of COVID-19. And eventually we're going to solve this health crisis. And then there's a question of what happens on the other side. I think Dave Wilson's chart of the day, a shout out to him, he put it on the head that those Microsoft and Apple combined are bigger than all the financial stocks in America. Those kind of extreme valuations. And if you look at the Russell 1000, so the 1,000 largest stocks, and look at value and growth, you're going to back to levels we saw in 1990. And one of our managers, AQR, sent me some material yesterday. When you look at old measures like price to book, sales to price, these are stuff that Tom Keene used to love in the old days with me. But you look at those measures, the U.S. and the whole world, technology is at the 99th percentile of valuations. At some point, you're going to have a huge reversion to the mean. Probably not. It can stay and persist for a while. But at some point when the health crisis is solved, we are going to go back and shop in other places in Amazon. We're continuing to use Microsoft just like we always did. But you're going to have a reversion of the mean, and that's going to be painful.
Taylor?
On that note, though, it's interesting, Chris, that growth has been outperforming value. And we keep talking about this value trade back into it, and yet it's been painful that growth has continued to be the big outperformer. Do you see growth extending those leads over value?
You know, Taylor, we can see extreme move for a long time, and that's why it's been painful. I mean, you look at the last 12 months ending in July, small cap growth had almost a double-digit return where small cap value had a negative return. So it has been painful. But I think diversification, get back to Romaine's question, how do we protect a plan like ours? You diversify. You don't just load up in those FANGMA names. You've got to spread your risk around, diversify in other areas. You know, some of the non-U.S. markets are actually doing okay relative to the USA. And in our case, we're going to be in real estate, we're going to be in fixed income, we're going to be in other strategies besides just global growth. So everybody out there that's got a 401k needs to step back, look at their asset allocation, and not just stay in the large cap growth names. They could run for a while, and again today, hallelujah, they're up again. But Nouriel Roubini, while he's always negative, he's not usually always wrong. This market is well overextended, and it's already flashing signals, traditional signals that tell us it's not sustainable.
Yeah, Dr. Doom talking about U's, W's, V's. I'm interested, Chris, in your perspective. You're just saying, therefore, perhaps it's time to look outside of the US, but we just had pretty bad, well, a slowing in momentum in terms of PMIs coming out of Europe, an actual downward trajectory for the likes of Japan and Australia earlier today. How much does the dollar factor into how much you want to go abroad?
The dollar's a big piece of it, Caroline. That's the reality. It's the currency diversification. In our case, we're a big global investor. So over half of our portfolio is always in the USA. But we have been looking at when is the right time to go overweight developed markets outside the US and eventually emerging markets. Now, we could have said, you know, emerging markets have been undervalued for almost 2 years running. But there are going to be some opportunities. Once you're out of the health crisis, out of it, the market's going to struggle, I think, to go higher. But you really do need to look at diversification and be more global in your portfolio. The concentration in these names from all the Robinhood traders, those people came in and they're going to leave just as quickly.
Chris Hellman at Kelster's there with a view forward there for institutional money. Coming up, the view on the fixed income market, James Karen, Morgan Stanley. We'll do that to start off the 6 o'clock hour strong. Anna Edwards and Tom Keene, this is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
We still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. Good news is that it is continuing, and it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Some things you see coming. Some things you don't. You can keep on.
This morning, the surge of last week, it continues. The FTSE up 22% off the bottom. The American S&P 500 up 51% off the bottom. The difference, American digital dominance. There are sure signs of inflation. Lumber, a moonshot. Iron ore, too. Against that, a quote, incomplete recovery. Look for sustained unemployment. And virtual Trump, he'll be different than virtual Biden. Lose a Zoom. Bring in the fam, Trump Jr. tonight, then the First Lady, then Mrs. Eric Trump, and on to Mrs. Kushner, introducing her father on Thursday. Good morning, everyone. This is Bloomberg Surveillance. I'm Tom Keene in New York. Anna Edwards in for Francine Lacroix in London as well. Anna, we continue with the politics here. Tell us about the Prime Minister's August. What is Prime Minister Johnson doing here? Is he virtual or is he out there?
Well, he wasn't here. He wasn't in London for some of it. For a few days, at least, he escaped to the Scottish Highlands, and who can blame him? Because everybody needed somewhere to go this August, didn't they? But his anonymity there didn't last long. He was found by some photographers, and he's back to London. But yeah, he's been pretty silent for the last month. There's been a crisis in education that's been handled by his education minister, and lots of people asking, where's Boris?
That's exactly what I perceive over here. He's been pretty silent. You wonder how that changes into September as well. It's an eventful week, folks. David Weston with our convention coverage as well. We'll start that tonight at 10 p.m. Right now, the First Word News. Here's Ritika Gupta.
Morning, Tom. And President Donald Trump says a coronavirus treatment that involves blood plasma from recovered patients will be expanded to more sick Americans. It widens access to the promising therapy even before researchers fully understand how it works. The Financial Times is also reporting the White House is considering fast-tracking the Oxford AstraZeneca vaccine. New Zealand's Prime Minister says that the lockdown of Auckland will last an extra 4 days as authorities try to stamp out an outbreak of the coronavirus.